Well, good evening. Welcome to Capital Market Live on Channels Television. I'm Ladi Williams. Well, the month of October is kicking off with some downside action for the local bonds. First, let's take a tour of outside the country and see how other major markets performed this week. So we see major bourses around the globe ended Friday's trading session, mostly mixed as traders assess the September jobs report. That's from the United States. On Wall Street, the markets closed the day in a green with the Dow up 0.81%, S&P 500 gained 0.90%, while the tech-heavy Nasdaq Composite gained the most, up 1.22%. In Europe, the indexes ended the day higher, except UK's FTSE 100 index, which fell marginally by 0.02%. Across the Asia-Pacific region, Japan's Nikkei recorded a moderate gain of 0.22%. China's Shanghai Composite Index remains closed for the Golden Week holiday for the most part of trading session. But the last traded day, we saw it gained about 8.06%, while Hong Kong's Hang Seng Index ended Friday higher by 2.82%. And back home at the NASD OTC securities market, its performance ended the week stronger as the index jumped by 31% week to date, while the market cap closed higher at 4.01 trillion naira. At the same time, the volume of securities traded this week fell by over 90% to 53.7 million units, while the total value of transactions for the week also fell by more than 3.92%. And the number of deals carried out was higher by 175% week on week. Top three advances for the week are Okitipupa Oil Palm, Acorn Petroleum, and Afriland Properties. Verizon Campina and NASD PLC were the top losers, while Aradel Holdings was the most traded securities for the week. To the domestic stock market, ended the first trading week of October in the red. No thanks to profit-taking on some bellwether stocks, particularly the shares of industrial giant Dangote Cement. As a result, the market's main index fell by 0.95%, bringing the month and year-to-date performance lower to 1.1 and 30.4%. Notably, significant sell pressure was intense across the industrial goods and the banking sector of the NGX, while the consumer goods, insurance, as well as the oil and gas sector of the market recorded some gains. In the midst of the lackluster performance of the benchmark indicators, activity levels were mixed within the week, with total trading volume down by 13.6% week on week, while the value of traded trades surged by 188.9%, and the total number of deals carried out for the week lower at 39,867. The shares of Deep Capital was top gainer this week with a 31.53% increase on its price per share. Coals led the losers with 15.63% drop, while the trio of Guinness, Nigeria, UBA, and Japol Gold were the top three most actively traded stocks for the week. Now let's look at one very important information investors look out for, and that's dividends announcement. We know it's a strategic tool for companies to communicate their positive outlook and growth potential for their shareholders. Also, for the investors, it includes the fact that it substantially increases the stock investing profits. So let's look at some of them now that were announced this week, and we see the likes of Fidelity Bank. Next, will be paying 85 kobo per ordinary share of 50 kobo each, and that'll be paid to shareholders whose names appear in the register. That's for the members at October 17th. 2024. This is definitely bigger than the last interim dividend announced, and also much more than the whole year of 2023. Also, we see United Bank for Africa. They stunned the market with the announcement of a record-breaking 2 naira per share interim dividend for its shareholders. This development, it marks the highest interim dividend payout among Nigerian banks in the first half of 2024, and definitely we saw investors actually jump on that, and we saw the impact on most of these stocks of these banks. So definitely investors are very much interested in what will be paid, because that definitely is not just about stock price rises. They also want to hear how much dividends these companies are going to be paying. So some other stories now. We see Nigeria's Purchasing Managers Index expanded to 50.5 points according to the latest report from the Central Bank of Nigeria. The cement sector recorded the highest growth in economic activities for September 2024. New orders increased during the month, as indicated by the 52.2 points recorded in September. 19 subsectors, including chemical and pharmaceutical products, saw growth in new business orders, while 14 subsectors reported declines in incoming orders. Some subsectors, such as furniture and related products and motion pictures, cinema, sound recording, and music production, showed no change. All right, to help us unpack the equities market in the third quarter and get an outlook for what's to come in this fourth quarter and a possible guide for where you should piling money next for your investment. Joining us now is Damilare Ashimiyu, macro strategist, AfriInvest, joining me right here via Zoom. Great to have you on the show.
Good evening, Ladi. Thanks for having me.
Good evening
to all our viewers across the world.
Yeah, and thank you for sharing your weekend with me here. So let's look at the performance now in the third quarter. We saw the all-share index dropped, for the quarter, but for September, well, we saw again again. What would you say drove sentiment in the third quarter of 2024?
The reality is that the performance of the equities markets have largely been mirroring the dynamics in the broader macroeconomic environment. Yes, year to date, the NGX year to date return is still in the region of about 30.4%. But if you break it down on a quarterly basis, the NGX have the 30% return of the NGX has largely been driven by the record performance in Q1. The last two quarters, Q2, Q3, the NGX have actually weakened in terms of performance. In Q2, the NGX lost about 4.3 and about 1.5 in Q3. So meaning that it was a gain of about 9.8 or so in Q1 that is still sustaining that year-to-date performance. By and large, talking about what actually made the performance in Q3 not to be very impressive. Like I said, it has been more reflective of what has been happening in the broader macroeconomic environment. You have the problem of the further tightening of policy rate environment, which is affecting some key sectors. You also have the problem of FX. Now, when you then look at the impact of these two developments in the macro environment on performance of the different sectors, you say that it has been a mixed bag. For instance, the FX crisis hit players in sectors like the ICT, consumer goods, very badly because they are largely exposed to FX in terms of their operation, and this hits their performance. So in their earnings for Q1, Q2, it was not impressive, it was not rosy. And so market reacted to that and sold off of many stocks in this segment. But it has been a positive one for those in the oil and gas, and that is why year to date, the oil and gas segment is the best performing sector on the NGX. I mean, the oil and gas has returned over 100% year to date. And if you talk about key tickers on the NGX, stock tickers like Oando that has gained over 500% year to date, talk of Seplat that has done more than 80%. So the impact, I mean, what has driven this is the fact that the oil and gas guys are earning in dollars. And so because of the pressure on FX, when they convert their earnings to Naira, it's a huge one for them. So market investors are pricing the dynamics in the broader macroeconomy, which is also affecting the performance of companies in terms of pricing them and deciding where to put their money. So by and large, the performance of the equities market has not really been disappointing or largely not deviated from what is happening in the broader macroeconomy, where FX crisis, tightening monetary policy is shaping the earnings of companies, because investors are already factoring what are these guys likely to declare as profit at the end of the year, which will also cascade to dividend for them. You just mentioned about banks. The dividend that the banks are declaring now are part of the gains they had last year due to FX gain, and that has also continued this year. So those sectors where the dynamics in the FX remains favorable for them, you still see their tickers punching with.
Right, and I'm sure for what we're seeing, with these banks, I don't think they're too worried about most of those FX gains, being taxed.
Yeah, I mean, you recall that about 2 months ago, the Bankers Committee issued a note where they, came out to tell the government to have a conversation with them to really look at what should be taxed from that their windfall gain, which the government wanted to tax 75%. Because before the government made that pronouncement, one, these guys have actually publish their audited numbers. So meaning that they have actually been taxed originally. So if you then want to do 75% tax on whatever they made at FX profit last year, it will be a double tax. But I believe that is being sorted out with the government. But by and large, if you look at the performance of most Nigerian banks now, right, their performance is largely driven by both the interest and non-interest segment of their business. So it's not really aimed on FX gain alone. Yes, FX gain contributed a bit last year, about 20 to 25% of their profit. But by and large, in the area of primary business like interest earnings, these guys are making decent earnings because we have seen interest rates being hiked multiple times. Last year, we had just about one interest rate hike in July. But between February and now, we have seen more than 700 basis point increase in MPR, and the banks have, leverage on this to reprice loans to their customers. So this is really helping their earnings. And in terms of their non-interest earning channels, these guys are now making decent earnings from their non-interest earning channels, like their digital channels, the digital channels such as POS and what have you. So the banks have actually acclimatized, that's what I would like to use, to the pressure in the economy, and they are still managing to sweat out their earnings to deliver value to their shareholder. And that is why most of the pressure in the economy, as you see on other sectors like the consumer good, where, for instance, the brewery, you have all the players there booking back-to-back losses, is not telling on the banks because, one, they are less exposed to FX volatility, but they have more of FX asset than liability. And second, they are also able to push the pressure to their customers who come in for loan and what have you, because of the structure, the nature of their business. So by and large, I think the banks will continue to wriggle their way out of the current macroeconomic challenges that is facing businesses. But for the other sector, it will be quite interesting to see what the CBN and the other arms of government would do on time, especially to stabilize the FX. So that is very key. If the FX is stabilized, then inflation also will begin to shape up in terms of moderating, and other segments of the economy will begin to find their way, and we'll see a broad-based recovery across different sectors.
Okay, and talking about the banks, being able to wiggle their way out of most of the economic downturn we're seeing, right now. We're even seeing that data coming out that credits to governments that actually increased, in the last data that was taken. But looking at the whole economy and how it's impacting, businesses, what does it tell us when we see, the banks, declaring bumper profits and bumper dividends when most of the economy is still struggling at this time?
Yeah, I think it just reflects the what I would call anomaly in the economy, and you can't take that away. Market is never efficient. In fact, the inefficiency of market at every point is again to another particular sector. What I mean is that even when an economy is not efficient in its operation at any point in time, there's always a sector that will be on the receiving end, while there will also be a sector that will be on the positive end. For instance, last year when Nigeria changed its FX management policy structure, that policy alone, which saw the naira devalue by more than 69% within the space of 6 months, wiped out shareholders' fund of most players in the telecom sector. For instance, like MTN, they had about 740 billion loss last year. Not because in terms of revenue, in terms of performance on their pure business line, not because they didn't do well, but because most of their resources, most of the equipment they use, most of the company they partner with to deliver telecom service, they charge them in dollars for mass, for whatever. So it eats them badly. But for banks, because most of them have learned from what happened during the global financial crisis of 2008. So most banks are long on dollars and short, on naira, meaning that they have more dollar asset than liability. And so when the dynamics played out last year, it was a favorable one for them. So because of the nature of their business and because of the learnings they have taken over the years, but the other sectors of the economy cannot do that. So, and that is why, in order to strike a balance, and that's one of the arguments of the federal government coming up with the windfall tax, that they want to tax bank gain. But again, you want to also argue that it is not only bank that make profit from that dynamics. Yes, they might be the biggest gainer, But there are other sectors that also gain, like those in the insurance and the oil and gas guys too. But by and large, what needs to be done is for the government to tackle the cause of the imbalance, because you need a level of balance in an economy to have fairness, to have stability, and to have the economy not convulse. Because if you have three sectors in an economy that is significantly pressured, the economy will convulse. And by and large, the banking sector is a services sector. In terms of labor contribution, services sector contributes less than 9% of the labor force. Meanwhile, agri, trade, manufacturing contributes about 70%. So if sectors that account for more than 70% of your labor force are under pressure, what you are calling for is mass unemployment. And we saw that reflecting our recent labor force statistics, where unemployment has moved to 5.1%, even with the new LIO model from 4.1 a year ago. So by and large, we need to tackle FX problem. We need to tackle inflation holistically so that every sector of the economy can thrive fairly.
Right, and I'm sure that the banks cannot employ everyone at this point, even though they're doing so well.
It's a services sector, so they drive more on digital on digital channels. So they can be labor intensive. It is technology intensive, and that is nature of banking, and that's what will continue going to the future.
All right, Damilare, so much to unpack there, but we'll take a break now. When we come back, we'll also look at other segments of this economy and what to expect in the fourth quarter of 2024, this capital market. Do stay with us. Welcome back. Well, the Nigerian Securities and Exchange Commission and the Nigerian Exchange Group and the Johannesburg Stock Exchange formed a strategic partnership focused on governance, market development, and sustainability initiatives. I will see the statement released to the public says the delegation from NGX Group PLC, led by Group Chairman Mr. Umaru Kwaranga, alongside senior officials from the Securities and Exchange Commission, headed by Director General Dr. Momotemi Agama, visited the JSE for a high-level engagement. The NGX Chairman, Mr. Kwaranga, expressed optimism about the mutual benefits of the visit, noting that as a demutualized exchange like NGX Group, the JSE's governance structure will significantly influence the exchange's decision-making moving forward. On our part, the CEO of JSE, Leila Afuri, highlighted the increasing significance of African capital markets within the global investment landscape. All right, let's get back to the conversation now. We still have Damilare Ashimiu, macro strategist from AfriInvest. Thank you for staying on, Damilare.
Thank you, David.
Yeah, you were breaking down, most of these bumper packages we're receiving from the banks, and seeing that the banks are able to, wiggle out of most of this economic downturn that we're experiencing, in Nigeria. But I'm looking at the dividends announcements now with Fidelity Bank announcing about 85 kobo. We have the likes of UBA also announcing 2 naira interim dividends. That's quite big, compared to what was paid for the whole year of 2023 and the former interim dividend. So could this announcement, could it be the next catalyst for the market?
Well, to a large extent, yes, it will support the market a bit. If you look at the banking sector index, right, in Q1, the sector as in fact, all the indices gained in Q1. Q1 was a very strong quarter for the sectors in Nigeria. But in Q2, the banking sector took a major hit, losing about 19.4%, so to say, because that was when there was barrage of policies from the CBN that, that focused on that sector, and it was as if there is no hope for them. That was when announcements on recapitalization began, a lot of policies there. But because the bank have shown resilience, in absolute terms, you're looking at their dividend. The dividend these banks are declaring very impressive. Fidelity, declaring in terms of 80 kobo, which is even more than what they declared as full year in prior years. So it shows that the banks are trying to incentivize their shareholder or compensate their shareholder who have been, supportive over the year. I'm sure many of them will have been willing to pay more than this if there is no policy around the fact that they should not pay their FX gains from last year's dividend and some other regulatory pullback factor. But one of the things the bank also, they know that they need to do to encourage their investors. Recall that many of them came to the market recently to do rights issues or additional share, as the case may be, in order to raise more equity capital to meet the new recapitalization business. So if you want to incentivize investors to keep hope in you, you have to pay them good dividend from whatever profit you have made. And the banking sectors, the banking guys are not doing badly, so it's fine. But if you look at it in terms of dividend yield, right? For a Fidelity that is paying 80 kobo dividend, their price about a year ago was in the region of 8 naira, 9 naira, but now in the region of 13, 14. So the dividend yield is not significantly higher compared to what it used to be, but it's an encouragement, it is positive, and it is telling on the banking stock, because while the sector lost in Q2, it gained about 13.8% in Q3, which is good. And we think that going into Q4, the banking sector will still hold its weight. Hold its strength in terms of performance. Because if you want to talk of sectors that you think that their Q3 earnings number will be encouraged, will be positive, and their full year number also will be solid, irrespective of the dynamics the economy will take in these remaining few months, the banking sector will come perhaps maybe second only to the oil and gas. So by and large, the prospect is there for banking stocks going to Q4. I would think that they will maintain that positive momentum.
Right, and definitely talking about what to expect for most of the economies and in this fourth quarter. We know Israel-Iran tension. That's I'm sure that's on the back of most of the investors' minds at this point. So talk to me about what kind of portfolio is best to go into a time of geopolitical tension.
Yeah, so the best portfolio to have at any time, not even only in times of geopolitical tension, is a well-diversified one. But again, the mix of diversification can then be strategic. If, for instance, a portfolio where you have stocks across 4 different sectors, you might not do 25% each. For instance, just like you mentioned, at a time like this where we have domestic challenges facing businesses, we have FX problem, we have yields also going up in the fixed income segment, which means that companies that are not going to do well, that are likely not to do well in terms of earnings performance, are likely also to see their share price drop. So if you look at those dynamics and then also put that side by side with what is going on the global market, you think that a portfolio now should concentrate more the energy sector, or what I call the oil and gas, the banking, and to a large extent on the agri sector, because the agri sector is also very decent. The fact that Naira is cheaper compared to other currency has made Nigerian export to be more attractive to global buyers. And that's why you see that players like Presco's, they are churning in very fantastic numbers. So the dynamic is that now a portfolio should be built around those sectors that will take advantage of what is happening locally, which may not change in the short term, to take advantage of the global market and make earnings. So the crisis in the Middle East, we are praying, we are hoping that that crisis will be stemmed, because we don't want war, we don't want crisis. But in the event that crisis is not well managed, such that there's a truce among the warring parties, it will always speak good for those in the oil and gas sector, because it means that oil price will shoot up. And by the time those ones hand their money in dollars and convert to Naira, it will be bumper earnings. And you are seeing that tell on the performance of oil and gas tickers like Oando, Seplat in recent months. So by and large, those sectors will be very interesting to consider. Oil and gas, the banking, the agri sector, going into Q4.
Right. So much to unpack, and definitely we pray for peace, in the Middle East, so that all portfolios can actually do well. But thank you so much, Damilare Shimiyu, macro strategist at AfriInvest. It was great having your perspective today.
Thank you for having me. I do enjoy the rest of your weekend.
And interestingly, it's World Investor Week next week, and definitely it's all about investor protection. And I'll see IOSCO in collaboration with the Securities and Exchange Commission right here in Nigeria. They have some activities planned out for next week. And we have Franka Chukwugo, Executive Commissioner, Legal and Enforcement at the SEC, breaking it down what to expect next week.
If you're a registered scheme, of course you are registered, and you've gone through some kind of process to be sure that you're fit and proper, whether it's you, the person providing the service, or is the product that you're bringing into the market. But for a Ponzi scheme, there's no registration, there's no vetting. These are just schemes that collect money from investors. First comers have the opportunity to be paid with money collected from later investors. These investments offer very high returns, and there's no consequent risk. There's no investment that can give you such high return without any risk. So if anybody is approaching any investor, offering you any investment that has very high returns, and there's no risk that is being disclosed, the investor would have to be wary. If you cannot find this in particular service provider or anybody offering you investment on the list of people registered with the SEC on our website, that is a red flag. If someone comes to you and is offering you an investment opportunity and you're asking questions and they're very reluctant about answering your questions, that in itself is a red flag.
All right, with that, let's go to the top stocks, top performers and top losers for September. We see the likes of Burger Paints up 47.55% in September. ABC Transport 47.44%. eTransact 47.06%. Top losers, Multiverse, topping that counter 18.16%. That's for the whole of September. And we have the likes of Julius Berger there, 17.89%. To key index performance, we see the banking counter was up 10% for the month of September. Oil and gas, another good performer there, 7%. While the consumer goods index was the laggard with the industrial goods index 1.24 and 0.69%. So this can tell you what to look out for in the month of October. Where do you piling all of that cash? Thank you so much for watching today. That's how your money performed for this week. And you can catch us again on our YouTube channel. You can also visit our website, www.channelcv.com. I'm Ladi Williams. And remember, if you must sell, find the top. Bye-bye.